So, Matt, what's going on in Oklahoma?
Same old, same old. We've been so caught up on the residential and basic commercial side. We haven't done any business stuff in the last week or so. So I made a couple follow-up calls, but didn't connect with anybody. So I just need to get back to them again this week and see where we're at.
Yep. Yeah, I mean, a lot of times you'll find the sellers are not really ready to sell. You know, you might have to follow up with them for a year or two before you just hit them at the right time.
Well, the lady that I had the real good conversation with, turns out like her husband had no idea she was talking to me. So, and a guy that I think I told you that one of the guys that I reached out, and I was like, hey, have you thought about buying any other businesses? He's like, yeah, I want to expand. Yeah. Well, he went, apparently he knew exactly who I was talking about, went and talked to him, which I told you like a month ago.
Yeah.
And
yeah.
except he went to the husband, and the husband's like, I don't know what you're talking about, man, but if we decide to sell, I'll let you know. And then it turns out that she didn't know that she was talking to me, blah, blah, blah. So
That's funny.
So I'm guessing they're trying to figure out what it is that they want to actually do.
Like get divorced or not?
Well, at least be on the same page, whether or not they decide to leave. But I think she was saying how he's just beat up and ready to retire, and they need to get out of the business, and she wants to know where to start. So I think she was just kind of out ahead of him.
Yeah.
But we shall see. I've had a couple other inquiries, and I just need to get back in touch with them, put a decent commercial deal under contract, and then had a handful of residential things going on. So we're like 10 different places at once.
Yeah. Yeah, I gotta say it's interesting because you know, this nursery deal that I've been working on. So the nursery is a business. It's really it's on like 23 acres. And so, you know, when I look at the real estate, in my opinion, and typically if you Google is farmland, you know, commercial or residential, typically it's viewed as being commercial. It's running a business, right? So it's commercial land and all that. But there's also 3 houses on the property. So for that reason, the listing agent, I'm representing the buyer in it. So when we submitted purchase agreements, we submitted 2 purchase agreements. One was a commercial property for the real estate, and the other was the asset purchase agreement for the business. Okay, so we submitted those together. Ultimately, the offer was accepted, but then, you know, now you've got a situation where the listing agent was residential. So she's sending all these residential forms, disclosures, this, that, and the other thing that all require multiple signatures. So it's signed by the seller and has to be signed by the buyer. In business, you know, there's a few forms that have to be signed by both buyer and seller. I mean, you've got one seller disclosure, one buyer disclosure, and you've got any amendments to the purchase agreement, got an allocation of purchase price. So you have a few forms. But man, these on this residential side, I'm getting inundated. I probably have, you know, 30 forms that she sent over to me that some are and I've got to set them all up for the buyer for digital signatures and everything. There's like so much bloody work in just managing all the paperwork. It's crazy. So I'm trying to track what's been signed, what hasn't been signed, and all of that. It's on the business side, it's what's easier about it is we create a data room. We just put all the documents in the data room, and the data room keeps track of who's accessed it, the date, the time they accessed it, and what, you know, they logged in. And so it makes it so much easier because there's a team. The buyer has a team of 8 people now that have to be copied on everything. He's got, you know, 3 on the attorney side, 3 more that are business associates, and then, you know, the listing agent has to be copied when he signs something. It goes back to her. Otherwise, I have to do it manually, and you know, then somebody else. So it's just the number and the volume of emails going out and everything would be insane without the data room. Because now I'm just uploading everything into the data room, and everybody that's supposed to have access has access. And the data room notifies all of them that something new has been uploaded. So I don't have to do that piece manually. So what you're going to find is that if you use the tools that are available to you, because Vault Rooms is a benefit to you as part of your IBBA membership. So you all have access to Vault Rooms free of charge because of your IBBA membership. And so when you start using those tools, it can save you a lot of time. And the other thing about using a data room that's really beneficial is that it does have an audit trail. If somebody, you end up in litigation 2 years later and a buyer says, oh, but they didn't disclose the financials, or the financials they gave me were different than what they're talking about now. And it's like, you go back to the data room and you can print out an audit trail that shows exactly, that yes, he did download the financials, the date, the time he downloaded them, all of that. So
Yeah, I just used Vault Room on Tanya's advice, and it's a breeze to use. If you're technically challenged, like I am in 98.7% of the cases, it's really simple to use. So if you guys haven't used it yet, definitely check it out.
Yeah, it definitely makes your life easier. Ryan, let me see. You have a situation where the seller deducted too many personal expenses on his taxes. Now the bank won't accept many of his adjustments. Yeah.
Every one of them. All
Yeah,
the opportunities there.
Yeah, that's the problem, Ryan. I mean, with business owners, the bank is going to allow a certain amount of add backs, and they're going to want you to substantiate them, or want the seller to substantiate them. But there are certain categories of add backs where they won't allow things to be changed. Cost of goods is one area where an SBA lender is not going to allow any add backs in that cost of goods area. The best thing you can do here is, as far as the personal expenses go, is you're going to have your seller go back through his accounting records and maybe print out, if he uses QuickBooks, he can go to transaction reports and print out transaction reports for specific categories. And if the descriptions are reasonable, the bank might want to pull receipts, or might want the seller to pull receipts. But yeah, it's a problem. The small business owners don't understand that when they run too many expenses through the business and make their business look unprofitable, it becomes more difficult to sell, because the business itself won't qualify with the lender. So then the seller is going to have to carry a note if they want to sell the business. And that's really your other option. You can talk to a lender and see. Sometimes a lender will say, okay, well, I'll underwrite the loan, but the buyer is going to have to come in with 40% down. We'll only do 60% loan. And then you might be able to get the lender to go 60% loan with a combination of 20% down from the buyer and a 20% note from the seller. So there are ways to do it, but it definitely complicates matters. And if the business appears like it doesn't cash flow at all, then there's probably no loan to be had. You're probably looking at straight seller financing in order to get it sold.
Yeah, the cost of goods is interesting, right? Because you figure a lot of small business owners, they buy their supplies every week at Costco, no matter what type of business they're in. And while you're at Costco, you see the rotisserie chicken and you see bottles of wine on sale, and you figure, hey, what the hell? Let me pick them up for the house and just charge it to the business, and then it comes right back and bites you in the butt when you're trying to sell that business.
Yeah,
So.
big screen TVs.
There's an idea.
All of those things. Yep. New
Well,
washer.
we need a TV for our home office. So doesn't that count?
That one technically, I think could slide through, but yeah, those 6 bottles of Merlot they may not. I don't know, unless you're getting them out to
Well, those
clients,
do
which I guess
too.
they
I
would,
mean,
right? Okay, I take
I mean,
it
that's
back.
client appreciation.
That's true. I take
client
it back.
appreciation, you know,
Maybe a lawnmower or, you know, a beach chair, something like that may not cut it. I don't know.
I mean, in all reality, we did have a group of people at our house and we did a mimosa party, which involved like 6 bottles of champagne. So
yep. No, it's all good. I would not, but I would never put that under cost of goods. So if you're doing champagne and you're doing stuff like that, you know, if you're having an office party, I'd put it under office expense. It's an office party, or you put it under, you know, meals, entertainment type things. If it's, you know,
well, except
gifts,
now, I don't think, I think as that tax bill a couple of years ago, you can't write off any entertainment.
yeah. So then, business gifts, you do business gifts as far
Yeah,
as,
some food,
you know,
yeah.
bottle of wine to clients or whatever, client appreciation. So yeah, marketing.
Slap a sticker label on it, marketing.
Yep. All right. So what else have we got? Right. General